Are you thinking about buying a home in 2022? We're in a crazy real estate market. This market may probably be even crazier than what happened back in 2008. So if you are thinking about buying, I want you to watch to the very end of this video because I will give you 6 tips on things that I see every single day that will help you understand the real estate market and make the right decision with your home financing. If this is the first time that you're checking out my channel, my name is Seanu Uyehara. I'm a branch manager with Loan Depot, helping you finance your homes all across America and helping you get your mortgage right. Whether you're thinking of buying your first home, buying a vacation property, or looking to buy an investment property and build your real estate portfolio, we've got you covered from coast to coast. And if you have questions, don't forget you can hit the description below. There's links to more information on how to get your mortgage right. And most of all, if you need a second opinion with your home financing, you can shoot that over to me and we will do a quick analysis to help you make sure that you get the right mortgage for yourself. And if you love my channel, please make sure to subscribe and share this because it helps me rank in the algorithm to help more people like you get their mortgage right out there. The first thing that I want to mention about the market right now is that there's less competition. As we've seen interest rates skyrocket over the last 30-45 days, many buyers have gotten scared. They've seen their interest rates go from the 4s to the 6s, and for many of them, this is their first time that they're looking to buy, and it's honestly spooked them to where they don't even want to look to buy anymore. I've had many of clients over the last several months, they were so invested into the process, but the minute that they heard interest rates jumped up, they put the brakes on. And I'm sure some of you have even probably done that yourself. So because there are less buyers that are serious in today's market, it makes it a little easier to go out because there is more inventory that is hitting the market across the country. So if you are a buyer and the interest rate is not affecting you because you have to purchase for a specific reason, kind of like what I did back when I bought my first home. As some of you know, I bought my first house and my interest rate was 7%, but I needed a place to live. I wasn't concerned about the market. I wasn't concerned about if I was going to lose equity in my property. I truly needed a house to move into to live. So if you are buying for these reasons, you're going to ignore the interest rates. But so many buyers, I can tell you, every day I talk to them, they get so concerned that interest rates are in the 6s and they want something in the 2s. And to be honest, you might be waiting a really long time if that's one of you and that's what you're hoping for. I really hope that you're not one of those people that are on the sidelines thinking that you're going to get a 2% rate anytime soon. And number 2, sellers are giving credits. Sellers are being way more flexible than what they were in the last 2 years. If you actually rewind the tape and think about what happened in the last 2 years, there was very little inventory on the marketplace, which meant the sellers held the gold. They made all the rules. If you wanted to make an offer on their house, you had to do whatever they asked because guess what? There was 30 other people behind you that was willing to make an offer on the same house. That's no longer the case. Many sellers have had to come to the realization that the price that they thought they might have got for their home is no longer relevant today. In fact, they are not only reducing prices, but they're also offering to pay for your closing costs. So if you're a buyer and you're a little tight on your funds to close, this might be the market that is ready for you. Again, you have to see past the interest rates and past what the media tells you because all these opportunities are taking place every day, but the media only tells you that interest rates are in the 6s or we're at record high interest rates, and then that deters you from accomplishing your goal, which is to become a homeowner. And number 3, like I mentioned, interest rates are up. We've seen them jump up significantly over the last 30 to 45 days. Now, in my 15-year career, I have seen higher interest rates, and to me, 6% is not that bad of a rate. Yes, it doesn't sound as sexy as 2 or 3% or even 4, but I mentioned this before. If you actually Google the 30-year fixed mortgage rate and you look at the history over the last 50 years, you can see that there has been numerous times that interest rates have been higher than 6%. In fact, they were even in the double digits. You could probably ask maybe even your parents or grandparents if they bought property back in the day what their interest rate was, and I'm sure they would even tell you that if you can get a 5 or 6% rate today, you should probably take it. My caution to you with interest rates going up is that interest rates are very volatile. So if you're serious about buying, I would look for programs like we have at Loan Depot where you can do what's called a lock and shop. So when we pre-approve a buyer, we can lock your interest rate for up to 90 days while you shop for your home. Why is this so important and why is this a great tactic? This is a great tactic because it helps you lock in your rate so you don't have to worry about it. Traditionally, what happens is you will shop for your home, and until you get into contract on a house is when a lender will then lock your interest rate in. So again, rewind the tape 30, 45 days ago, interest rates jumped up a point. If you weren't locked in or in a contract on that day, you got screwed. You were out of the picture. And for some of you, if your debt to income ratio was at the maximum qualification amount, you probably can't buy a house anymore, or you'd have to come in with a ton of money or get a cosigner so that way you could purchase. So you can see how the fluctuations in the interest rates can change your buying power. So to give you peace of mind, look for a lock and shop type program. There's a few lenders out there that offer these types of programs. Like I mentioned, here at Loan Depot, we do offer something like that. That is one way we can help give you peace of mind when you're out there looking for your home. Another thing you can look for is an extended rate lock policy. So for all of you that want to go buy a brand new home, and you might be looking at maybe 6 months, 9 months, or even a year out, you want to ask your lender, do you have an extended rate lock policy? Because again, this is going to give you the peace of mind while your home is being built, your interest rate will not change. And here's the big advantage to utilizing both of these programs is that when and if the interest rate does drop, you have the ability to do what's called a float down. So you can take advantage of that interest rate when the rate drops, which is really cool. So you're really protecting your interest rate, you're protecting your buying power, and most of all, your monthly payment, which is the one thing everybody is so concerned about. So I would look for a lender that offers those two type of programs. You don't know how much more volatility we're going to see in the upcoming months as we go into the second half of the year. And number 4, I would strongly recommend you keep an updated pre-approval. Most pre-approvals are good for 90 days because after that point, we have to make sure that there are no new debts on your credit report and to make sure that you still essentially qualify for the loan. But why this point is so important is because the mortgage industry, we're under attack right now. We are literally facing some of the strongest headwinds that we've seen in the last probably couple of decades. I know for the 15 years that I've been doing this is probably one of the tougher markets, even though I got in the business during the '08 crash. But what we're seeing with the interest rates being so volatile and less production being available, many companies are out there are actually shutting their doors. There's been a couple of pretty decent sized mortgage lenders that have thrown in the towel already. And through the grapevine, I've heard other companies that have mentioned that they are potentially up for sale or they're looking to exit the business. So whoever you decide to work with, you need to make sure that they're going to be around, because if you're shopping for 3, 4, 5, 6 months or even on a new build, and you're in an extended period of time, there is a small chance that that lender could potentially go out of business. And this isn't a knock on any lender out there, because as an industry, we all need to band together to get through these tough times. So just as a word of caution, make sure that the lender that you're working with is solid, because again, I personally had a couple of deals with the bank that went out of business last week, and we have to scramble to find a new home for these loans and also go over the new terms with the clients. So that's why making sure your pre-approval is up to date and with a solid lender is going to be paramount going forward. And number 5, for all of you first-time home buyers, or for those of you that are limited on your funds to come to closing with, and you wanted to utilize a down payment assistance program, a lot of these programs are getting pulled off the table because of how high interest rates have jumped up over the last 30, 45 days. Now, many of these programs are governed by state entities, so they can pull them at any time, but they can also bring them back at any time. So I would also make sure that the lender that you're working with stays up to date with these programs. Just because the program gets pulled off the table today doesn't mean it's going to be gone forever. It could come back in 30 days, could come back in 2 months, 3 months. We don't know what that timetable is. So don't totally give up on the buying process. It could just be a slight bump in the road for you, but just know that these programs, just like interest rates, are a little volatile right now. So if you have the ability to lock in a rate, if you have the ability to lock in that program, do it and move quick. If you're not serious about buying it and you're still dipping your toes in the water, I wouldn't get overly concerned about it yet. If you've made it this far through the video, I appreciate you watching, and do me a favor, drop the word home below in the comments so I know that you're still watching. And again, any of your friends or family could benefit from this video, go ahead and share this with them. And our last point, number 6, getting qualified is becoming tougher and tougher as interest rates have gone up. And there's also been releases from Fannie Mae and Freddie Mac stating that their underwriting guidelines are going to become tougher and tougher going forward. So depending on the type of financing that you're looking to qualify for, this may or may not be an issue. But some of you that may be a little more borderline with your qualifying, this is why we always stress this in the videos, talking about getting pre-approved. Because if the guidelines are getting tougher and your loan officer isn't necessarily aware of what the guidelines are, and maybe they cut a few corners to get you pre-qualified without verifying any information, send you out shopping for your home, that deal could easily fall apart. This is why, as a lender, when we pre-approve you, we send your file through an online underwriting system, which is called DU, which is what Fannie Mae utilizes, or Desktop Underwriter, or Freddie Mac utilizes LP, which is called Loan Prospector. So you're gonna send your file through either one of those systems, and then it gives you basically a scorecard to say, you as the buyer, let's say your name is Kirsten, and you're looking to buy a house. It's gonna then tell me whether or not your loan is going to get approved, or if we're gonna have any potential issues that we have to be aware of. Now, at Loan Depot, we actually have a system that can run DU and LP at the same time. We are analyzing both of the investors, Fannie Mae and Freddie Mac, to make sure that we can get you your financing. So if there are any sort of changes that happen, the system would have picked it up. This is why, again, I always stress the pre-approval, because I never want to skip any corners just to get you shopping for a home that could potentially blow up. So with the guidelines changing, with interest rates going up, you as the buyer, you need to do your due diligence and make sure that what your lender is telling you is accurate. Again, we're in tough times right now, and these are uncharted waters, especially for a lot of lenders. If your loan officer hasn't been in the business more than 10 years, they've never seen a market like this, and they may not even know how to navigate these waters. So you gotta make sure the person that you're working with has the experience. They're gonna know how to get you across the finish line. This is the biggest purchase that you're going to make. There's a lot riding on the line, not only financially, but emotionally as well. And that's why a good lender is gonna help you cross that finish line successfully so you can enjoy your new home, whether it's your first home, you're buying a vacation property, or if you're an investor looking to build your portfolio. And that's one thing we take pride in and we love doing. So if you are ready to purchase, make sure to click the description below to click on the link to get the application started. And if you ever need a second opinion on your home financing, that's what I'm here for. That's why I make these videos. Reach out to me and I'd be happy to answer your questions. Thanks for watching, and I'll see you on the next video.